What's going on, everybody? It's Giunta with Trend Trading Academy. I'm here to help you trade and get paid. In today's video, we're about to give you some serious value. I'm going to talk to you today about how to mark up winning trades on the charts. I'm actually going to take you to a trade that I gave to the team just a couple days ago. I'm going to show you what my thought process was and kind of take you through my mindset as I'm about to give out this trade setup. And now I'm going to show you how it all played out. We're going to use replay mode, and I'm going to kind of go back and show you how it all worked out based on the markups that we gave. And all you need is a couple of quick little lines. If this video is giving you value, and if you've been on the channel and it's been giving you value, make sure you go ahead and hit that like, comment on the video, subscribe, hit the bell, get the notifications, share the video, share the love, guys. Let's do that. And also, if you want to become a student, all you got to do is go to trendtrading.academy and you can eat just like the rest of the team is eating. All right. Quick little shout out before I spin this intro. You guys saw the intro release a couple days ago. Everybody's been showing love. I appreciate that. And I just want to give a shout out to my man Queese. You can go ahead and subscribe to his channel up here. My man does some seriously dope music, honors God through everything. I love it, man. So shout out to you, Queese. Appreciate you, bro. Let's get to the charts.
Faith in your mind, faith in your grind, invest in yourself, transform the Giunta. Faith in your mind, faith in your grind, invest in yourself, transform the Giunta. When you trade and get paid, 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 oh yeah, trade and get paid, trade and get paid.
All right, guys, so let's just jump right into it. All you need is 3 lines. That's it. I be seeing these people out here with these messy looking charts, got about 40 indicators on there, got lines in every direction, vertical, horizontal, diagonal, different colors. They got clouds on the screen. They got, it looks like a Crayola book. I don't even understand why they be doing all that. Like, and I'm not knocking you. If your chart looks like that, all I'm telling you is you don't need all that. All I'm telling you is that you're really adding more to it, and you're essentially just confusing yourself. The best of traders, we keep it simple. That's what we do. We don't be doing all that extra stuff. We try to take the most definitive measurements. We try to take the most definitive information that the market gives us, and we use that information to flow with the market. Right? That's it. What we're trying to do is not to try to make something that is 100%. We're not trying to, knock out every little thing by using an indicator or by using some level of measurement. What we're trying to do is we're trying to come up with high probability trade setups that are going to give us good breakouts, good retests, and good entry or good entry and take profit type levels. We want to have good risk reward. There's a lot of things we want to do, but we don't need 1,000 indicators and all these different markups to do it. These little 3 lines you see on the chart right here, that's all we need. Right there, that's it. So let's talk about this. So we got the little crosshair tool right here. You see, we got this line right here, we got this line right here, and we got this line right here. That's all we need. So the first thing we did on this markup is we see the overall market structure, and we see that this level right here that was rejected at the top, we see that we end up having a beautiful level of structure right there that was rejected. We got some liquidity there, and so we see the movement start heading down. All right, so now we have this down move coming right here, and so all we have to do is just see, is this going to work out to be a channel? And right now, look at that. How beautiful that is. It is. It works out real nice. We can spread that out. It works out real nice to be a nice little channel on the 30-minute chart. No big deal. Then all we have to do is see, because we see that this channel is coming down, we see how it comes down right here, and we get that rejection, so we drop our little counter trend line right here. All right, so now just like that, we have a channel to the downside and a counter trend line to the upside. All we really did was we put price in a position where rather than looking all through here and looking at the whole entire map of the of all these thousands of pips, we've narrowed down a small area of breakout. That's it. We have essentially captured the candles inside of a very small area, and now we just let the market do what it wants to do. So literally 3 lines, down, down. Now we have our channel, counter trend line, boom. We've captured the candles into a very small area. That's it. So now, how do I know it's not going to break out right here? Well, I got this rejection right here of this counter trend line, and I'm just showing you this on replay mode. But we got this little the counter trend line, and look at the convergence right there. This area right here, we have the channel and we have the counter trend line that are coming into one spot. So if price was going to push down right here, not only would it have to break out of our channel, but it would also have to break this counter trend line. So, and if you look here left, you see that we're already at a level of structure. All right, and when you kind of look left here, you see that what used to be a ceiling became a floor, was retested several times, and now it's retesting again. So in this area right here, that level has become a true level of support being tested numerous times. So in order for this to happen, we got to get a true breakout of both of these levels. I think that at this point, because we have multiple levels coming into confluence right here, that we get a rejection. Also, these wicks tell a major story. The wicks here tell us that we're getting a rejection. So let's see what happens. Right? It ends up pushing up just like we think. So now we're looking and we're seeing, are we going to get, is this going to reject right here, and are we going to get a breakout? So if we get the breakout right here of the top trend line, then we would be looking to take a buy, right? So if we're looking to take a buy, then we would be looking for this breakout right here that looks like it's happening right here. As soon as we get that breakout, we could take a breakout entry, or we could wait for the retest and then take the retest entry. So we wait and we see what happens. However, look what goes on. We end up getting a breakout, and then we end up getting a push back in. So in this particular case, it would have been highly possible to just take a L right here, because if you would have got in on the breakout, it would have came up and it would have just came right back down. And so we're back inside of our zone. All right. If you waited for the retest, you could have called that next candle a retest and still got in and would have been right back into the red. So sometimes that happens, but here's what we have to understand. Let's keep going. Look at how it keeps trying to break out. And that candle right there is really what tells the story, that blue candle right there. Because what happened there, look what happens next. Boom. Nice little engulfing down. That level right here, notice how the top of this level at the breakout is even with this previous level of structure right here. And it was not a lower low from the previous low, but an even top from the previous level of structure. What that means is that we could have known that this was going to end up being a false breakout based on the fact that it rejected this level. And we know that that's happening. Why? Because these people are gathering liquidity. The market makers come up in here. They set their structure level right back here. All them wicks, all that structure. They push it down, and then they come back and gather all that liquidity that right here. That's what these wicks are. So that's why we end up getting a false breakout on the top side, because what happens is they're coming in here, setting that level of structure, coming back and gathering all of that liquidity right here before a push back down. Now we end up getting this net 2 sets of engulfing candles on the downside, and we start pushing back up, and look what happens here. We start riding on that top channel, or that top channel line. Now this is what's interesting right here. This tells me that if we gathered liquidity at the top, then we should be expecting a downside move. If we are gathering liquidity up here, then we should be expecting a breakout to the downside, right? So that's very interesting. So let's see what happens. Boom. Soon as we see all of that happen right there, that liquidity gathered and everything is all retested and it gets back down on the bottom side of our channel line, we get a massive move to the downside, because now all of the strength from this gather is going to push the market in the bearish direction. So that's what that move is, and there we are. We have a beautiful breakout. Now, when it broke out with that big move like that, we could have went down to the 15-minute chart and found a little retest, but the good thing is we could just take the breakout. That candle closes, we enter the trade, right? So as soon as you see that candle close right here, we're below our counter trend line. We broke out of our little pattern here, and now we have an entry. So boom, right there, we enter the market. Let me go ahead and drop a little line on there, and we're gonna call that entry right there. So now let's see what happens. We continue to move down. Beautiful. There's your breakout entry. Now you start to see this retest. So just on the breakout entry right there, just from there, look at that. You got almost 42 pips right there. Beautiful, beautiful breakout entry. Now you start to get a retest, and look what happens. Right? So it comes up here, and we get this retest of this zone. So where the breakout was, right? We get a retest of that zone right here. You see from where the breakout to the bottom, from the bottom of the wick, you retest that zone right here. So breakout, retest or retracement, and then we can find if you're a retest trader, this is where you get your entry. So if you're a retest trader, let me go ahead and drop your line right here. All right, if you're a retest trader, you're gonna do your entry right in here, and boom, look at that, beautiful. Another retest right in here. Look what happens. It moves down, sets its new level of structure, retests the previous level, pushes down, and then retests this previous level. So every time it moves down, you're setting a new level for the next level of structure to retest. So right here, we get a retest at that very exact entry. And look what happens. Get a little sideways movement. Man, look at that. Beautiful. It's just a beautiful, beautiful move on the market. And so when you look at it here, just look from here all the way down. That's 120 pips. 120 pips. Beautiful move. So just like that, we're catching major pips. We're catching major movement right here. This is a 30-minute chart, and we just caught 120 pips. All right. Now this is the kind of stuff I do. If you were part of the TTA team, we called this trade. A lot of people was able to take this trade. Some on the retest and some on the breakout. You know, but either way, you were getting between 100 and 120 pips on a 30-minute chart. That's beautiful. That's beautiful. So beautiful, beautiful setup. And then here's the bonus. If you go back and you watch my a video I did a little while back, and I'll link that video above, about using my trend line strategy, we know that based on trend lines, when trend lines are broken, we can take the opposite trade. So all we have to do is use the same lines that we already have. That's it, the same lines that we already have. Watch this. Stretch that line out a little further. Stretch that line out a little further so you can see, just for visual effect, so you can see what I'm talking about here. But if we are now in a down move, what are we expecting, right? So if we know that these big extensions always have a pullback, so then we should be expecting a pullback to this level right here. And if it goes beyond that level, then we should be expecting it to pull back to this trend line. At that trend line, you can decide, is it going to reject the trend line or is it going to break the trend line and push back up? Let's see what happens. So you get this beautiful retracement. Look at that. It comes right back up into that same area. Look at this. Goes right back. Complete retest right there. continues to push up. And now we're looking for it to do what? We're looking for it to either, in this area right here, we're looking for it to either reject this area and continue a new lower low, or to continue back up and retest this trend line. So at this point, we could be, very patiently and very carefully looking for an opportunity in either direction to either continue and a downward, or we could be looking for like a re-entry downward, or we can be looking at a retest to the trend line. And look what happens. All right. You get that nice little push up. And there we are. We're right back at the trend line. And look at this. Notice how the trend line tried to push through the trend line and then ended up closing right at the line. All right. That's excellent, because now it just tells me when I see what happens next, this is going to tell me the next candle, the next move, the next extension or retracement is going to tell me whether or not I need to be bullish or bearish. Well, I've already got a clue, because look, when it came up and retested, it did push down, but it did not set a lower low. So you have a trend, a downtrend. It pushes up, retests the same area. But when it comes back down from that retest, we see that this is as low as it goes. It doesn't come back and set this lower low. So that tells me I have a serious inclination that we're going to be bullish, or at least try to retest this trend line. Then I get this big bullish move. It retests this trend line, and let's see what happens next. Notice here we get this pin bar. This pin bar rejects this level right here, meaning that I am no longer looking for lower lows. I'm now looking for higher highs and higher lows. Because look at structure: low, high, higher low, higher high, higher low. So now I get reduction right here. I get rejection right here. I get reversal right here. You can watch that video. I'll link it above. And there we go. Look what happens. Beautiful move. Riding inside the trend line, retest, and there it is. There's your breakout. There's your retest. There's your big move to the top. Now I'm at the top line. I want to see, does it completely break through my channel? And look what happens. Same exact thing that happens on the bottom happens on the top. Same way it tests and then breaks through. It tests and then it breaks through. We get the breakout, and look at this. Notice here it breaks out and then retests what used to be my entry is now my retest entry. This stuff is like clockwork, guys. It just continues to move. Look at that. Now from there, think about this for a second, guys. If you were to take this breakout trade right here, you could have got 21 pips. Then you would have ate some drawdown, which that happens. We ain't afraid of drawdown. You could have got 28 pips to the top of the channel. And then now you could have been in another 120 pips right back to your previous level over here. So you could have got 120 coming down and then 120 coming right back up. So based on structure alone, we were looking at 240 pips in two different trades on a 30-minute chart. We're not even talking about a daily chart, a 4-hour, a weekly. We're talking about a 30-minute chart, simply using 3 lines. That's it, 3 lines, right? These little white lines were just showing you entry. These 3 dotted lines are all you needed. I haven't showed you an indicator. I haven't showed you any oscillators. I don't have a messy looking chart. All I have is 3 simple but absolutely powerful lines, and that is how you mark up for a winning trade. All right, guys, there you have it. That is how you mark up a chart, and that thing is powerful. You guys see it. 3 little lines is all we needed, and we took this boy to profit. 240 pips, 120 down, 120 on the way back up. That's how you make money. That's how you own these markets. That's how you kill these charts. I hope that brought a lot of value to you. Guys, this is what we do at TTA. We do this every day. This is what we do with Trend Trading Academy. So if you want to become a student, make sure you go hit that website. I'm telling you, trendtrading.academy. We are eating together as a team. And for now, what I want you to do is to master your entries. Go ahead and watch this video right here. Reduction, rejection, reversal. This is how I enter trades. This will help you a lot. Go ahead and check out that video. I'll see you on the next class.